Hi, I'm Patrick Reid from the Adamas Principle. What a week it's been for risk currencies and risk assets generally. The big thing on the radar for us is the California announcement of 8,400 cases. If there's going to be any fatalities, we're going to see another leg of risk lower. The other thing to bear in mind is obviously Japan, Italy, Tenerife, the ghost ship, all of these things are happening. Um, how well is the US going to be equipped, right? And the other thing is the Chinese data hasn't actually been taking a hit. So when that starts to really bleed through, everything else will take another risk leg lower. But let's look at Eurodollar charts. So this was interesting because the 109.18 broke is the mid Bollinger Band, and we're really much higher today. It's like 110.40s. And, this is just interesting because it was begging for a breakup. It couldn't stay below that 108.66 Fibonacci. And then the mid Bollinger Band, it just touched it, paused slightly, then broke up. The big level, the big one looming for us is 111.88. That's the one to watch. Before that, 111, the figure. But as it goes today, this looks to me like a bit of unwinding. Normally in risk-off scenarios, you'll get dollar firm, but this does look slightly like a risk unwound. Euro is a funder, so let's just see if this is flow related as well as triggered by some risk plays. So the next chart, okay, right, dollar yen. This was a chartist dream, not so much now because the 108.86 trend line is broken. The 108.34 area. Not bad level down there, but when you're doing charts, when you're drawing really fancy lines, it's always good to remember levels disappear, even if it's momentarily disappear. They do re-emerge, but when there's a lot of risk flows, especially risk off, it's thin liquidity. People get stopped out, and just be aware. A lot of dip buyers a couple of days ago just got taken out to the cleaners, right? So just be careful. So 108.34 versus, I would say, 110.69, not really going to get there. But if 108.34 breaks, you're looking at 106.88. Next chart. Says it all, doesn't it? This is the good old Dow Jones. Really says it all. That is the mother of all gaps, just above 28,600, around that area. So the big level for us is 25,227. Let's just see what happens. But like I say, this correction has been needed for the last 6 months, right? It's just been a needed thing. But if this can continue, I would say 24 and a half. Expect that to be tested fully. And finally, okay, Euro Swiss. Okay, Euro's rallying, but not on the Swiss pair, because this is quite interesting. Despite the Euro rallying, this is a good sort of indication of risk off, because it's just pretty lackluster, right? So this is quite a good indication of proper risk off. Some Swiss buying there, capping any strength being delivered from euro dollar into euro Swiss. Excuse me for my cough, but that's about it. Be careful if you're retail. Be careful of dip buying. Just wait till this rolls out. It could have legs. It's risk off in the real sense. Look at EM, and that's it from me, Patrick Reid, Adamas Principle.